Good afternoon, everyone. This is Clay Chase with Torrey Hills Capital. Welcome to the Taseko Mines Non-Deal Roadshow virtual Zoom presentation for July 12th, 2023. I hope you're all doing well. We're just talking a little about our summers. I hope you're having a great summer wherever you are. I know you're either in Chicago or Denver or Salt Lake. We've been having some kind of unusual weather here, but now it's starting to get really nice. So I think we're getting into the thick of the summer here. Now, for many of you who are familiar with Taseko, this is going to be a great time for an update. There's a lot that I think is kind of about to happen in the company. We'll talk about that. Pretty exciting. For those of you that are new to the story, it's a great introduction to what we consider to be a real alpha stock in the kind of lower to mid-tier copper producers. And if you've been following copper lately, you know it's a great place to look right now for some value. The price of copper has gone up pretty good over the last year and a half, 2 years. It's $2 and change. Now it's close to $4. It's $3.84 a pound right now, which is really good for copper producers that are able to produce at a low cost, which Taseko is one of those players that can do that. And we think there'll be more price appreciation in copper, or not us, but a lot of the people who make a living out of trying to determine what will happen to the price of commodities. A lot of them are believing that copper is going to continue to be a strong market and continue to show some price improvement or cost improvement over the next 2, 3, 4, 5 years. And that's based on the supply and demand. Mostly the demand's coming from the electrification of the transportation industry. All of those cars, those electric cars and charging stations and the conduit that gets those electrons to those stations, they demand a tremendous amount of copper. So that's really driving the demand for copper. We'll talk a bit about that today too. So following today's presentation, which will last 30, 45 minutes of a short Q&A session. That being said, if you have a question during the presentation, just click on your Q&A icon or type in the question as a chat icon, and we'll make sure that your questions get answered during the presentation. And if you'd like to ask a question live, you can just raise your hand, click on the raise your hand icon. You can turn on your microphone and you can ask your question directly to our presenter today. Also, post-presentation, we'll send you a brief survey. Please get that back to me quickly so I can get that back to the company. Okay, let's get started. Taseko Mines, like I mentioned, is a mid-tier copper producer. Primary operations are in British Columbia, Canada. Their flagship's the Gibraltar project. It's Canada's second largest open pit copper mine. And also have a big project ramping up in Arizona called Florence. That's an in-situ project. That's different than what you'd normally think of as a copper producing project. It's quite different. It's real green, it's clean, and we'll talk a bit about that. And it's also very low cost to produce. In addition to these two producing copper projects, Taseko has a strong portfolio of additional projects, both copper and gold. Some are a combination, and these are in various stages of early development. We'll cover those if we have a little bit of time. Taseko trades on the NYSE, ticker is TGB, like Tango, Golf, Bravo, and they're also on the TSX main board as TKO. Taseko's trading about $1.47 per share, US market cap of about $540 million. With us today to discuss Taseko's operations is the company's VP of Investor Relations, Mr. Brian Burgo. Hi, Brian. How are you today?
Good morning, Clay. I'm good. Thank you very much.
Great. Well, welcome to the program. We're all ears. Love to hear all about Taseko. I'm going to go and turn my screen off right now, and that way you can put yours up, and we'll just jump right into the presentation.
Very good. Can you see it there now?
It's coming up. Yep. All good. Good to go.
Excellent. Well, thanks everyone for taking the time this morning. I'll give you a good run through the Taseko story. As Clay mentioned, jump in with any questions as we go. I'm going to focus on our two key assets. So if we have time, talk a little bit about our pipeline of other projects. And then we'll also talk a little bit about copper and why we've focused on copper. So just a real quick overview, who is Taseko? We are a producer today. We've got our Gibraltar mine in British Columbia, about 6-hour drive north of Vancouver. Second largest open pit copper mine in Canada, fourth largest in North America. So it's a very large scale, long life mine. Still has 22 years of mine life ahead of it. Our other key project is our Florence copper project down in Arizona. We are waiting one final permit from the US EPA, which we expect here in the next, we don't exactly know, but we think it's in the next, within a couple months, and could be closer to today than a couple months. But we are waiting for that one final permit. Once we get that, we are ready to start construction. Long lead items have been purchased. The project is effectively financed. Detailed engineering is done, so we are ready to go. That will transform Taseko. It'll not only give us a second operating mine, it'll reduce our overall cost structure because it is very low cost, and it will more than double our cash flows. So we're very much anticipating getting started on construction there here in the next couple months. We do have a pipeline of other projects, mainly, they're all in BC actually. New Prosperity, which was actually the original project of Taseko back from the 90s. Yellowhead, which we bought a few years ago, very large scale project, will be an open pit mine. And that Yellowhead could come on the heels of Florence in 5 to 6 years. So we've got a very strong pipeline of projects, all very large copper reserves. And yeah, the long-term fundamentals of copper are exceptionally strong, which is why our focus has been copper. We have the team in place. Most of us I've been at Taseko now almost 18 years, which is really from modern day Taseko when we restarted the Gibraltar mine. Most of us have been here 10 plus years. We've got a very experienced management team of operators and builders. So we've got the team to grow Taseko into the multi-asset mining company. It's not a coincidence that all of our assets are in North America. We do like this jurisdiction. We have rule of law here. We don't have to worry about the government stealing our assets. Yeah, upfront permitting can take a little bit longer than in other jurisdictions, but once you get that permit, as long as you operate within the rules and the regulations, you know you're secure. We manage our balance sheet very conservatively. We've got cash on the balance sheet, and we'll talk a little bit about the balance sheet and financing our Florence project as we go. Just a little overview on the capital structure side. As Clay mentioned, we do trade on the NYSE American, also in Canada on the TSX and in London as well. Our market cap today is a little over 400 million US. That's a typo there. Yeah, about 430 million US today, and yeah, we're trading just below $1.50. We have, at the end of Q1, we had $100 million Canadian cash in the bank, and I'm going to go back and forth between Canadian and US dollars, but I'll try and note when I am, which currency I am using. We are Canadian domiciled, so we report in Canadian dollars, but when we talk about our Florence copper project, that's typically in US dollars. We have a US $50 million undrawn credit facility, and we've just added a $30 million accordion feature to that to take that to $80 million. We do have some debt on the balance sheet as well. We've got a $400 million high yield note. This was a refinancing of an existing note in 2021. We took a previous note of $250 million, upsized it to $400 million. And that's a 5-year note, pays a 7% coupon, and expires, or comes due in February of 2026, still a few years ahead. And the reason we upsized it was to put cash on the balance sheet to build our Florence copper project. In terms of analyst coverage, we are covered by the typical Canadian brokerage firms and banks. We do also have Cantor and Stifel who cover us, and they have big US, they're big in the US as well. Average target price is just under $3 Canadian. And in Canadian dollar terms, we're trading about $1.85 today, $1.95 today. We have no controlling shareholders on our shareholder registry. As a group, Taseko management and board would be the largest. And then you can see down from there, the largest holders, 2.5%. So our shares are widely held. We're probably anywhere from 30 to 40% institutionally held, and the rest is retail. Big retail holders in the US, as well as Canada. So a little bit about copper. We've a lot of volatility in the copper space here in the last few years, really since coming out of COVID. We saw the price drop from about $3 per pound down to $2 per pound in March of 2020 as COVID really took hold around the world. And then since then, and then very quickly after that, demand came back and the price came back in a very strong way and went almost up to $5 per pound. It's pulled back from there, and today it's sitting about $3.85 per pound, which if you look at that graph there, $3.85 is a very good price. But a lot of people have a short memory, and when you come down from $5, people forget that it wasn't that long ago that we would have loved to have $3.50 per pound pricing. But we're at $3.85 today, which most copper producers are generating good cash, and it's a healthy price level. And if this is sort of if this is the new base, if we formed a base here between 370 and 390, then who knows where the next momentum could take us. Could take us well past $5. And what's going to drive that? In our mind, there's supply and demand. Demand's grown at roughly 2% per year for the last 100 or so years. It'll continue to grow at those rates, if not higher, as the world transitions to net zero. And but it's really on the supply side. It now takes anywhere from 16 to 20 years, if not longer, to build a large-scale copper mine. By the time you find the deposit, drill it out, do your pre-feasibility, feasibility studies, then you got to permit it, and then you got to finance it. And in the last few years, we've seen capital costs increase substantially. Today, the incentive price to build a new copper mine is probably $4.25 or $4.50 per pound. So even at $3.80, $3.85 per pound a day, we're starting to see projects get pushed out. But because it takes so long to build these projects, upwards of 20 years, we can look out with reasonable certainty over the next 10 or so years, and we know what projects can come on. And there is a lack of large-scale projects in the pipeline. We've had 2 large projects start up here in the last 6 months, 9 months. That's Anglo's big Quellaveco mine in Peru and Teck's big copper mine in Chile. Combined, they're about 500,000 tons of annual copper production. They've started up, they're mainly ramped up, and that product has been absorbed into the market. Yet we still see global stockpiles declining. Today, we're sitting with about 2.5 days of consumption in the global stockpiles between the LME, Shanghai, and in the US on the COMEX. All-time low levels of stockpiles. So demand is strong, the market is balanced today, the market's growing, yet stockpiles continue to decline. And then we have all this new demand from electrification. S&P did a large study about a year ago, and they looked at the amount of copper needed for the world to meet its climate goals. And what they estimate is demand will double, or has to double, by 2035 in order for the world, for all these countries to keep up with their goals. So to go from 25 million tons of demand today to 50 million in the next 12 years. And we know that on the supply side, there's no way the industry can keep up. So we think, over the long term, we've got, the fundamentals are exceptionally strong, stronger than ever, and we are headed for a major deficit. And the one thing about copper pricing is it is very elastic. Price of copper goes to $6 tomorrow. So you add a couple $100 to a price of a car, $1,500 to a price of a house, those costs can get passed along. So we are very bullish on the future. You know, the prices come down here from, you know, almost $5 to $3.80 here in the last year, but we think we're forming a new base. And then when we start to get this imbalance between supply and demand, we think the price can go a lot higher. You know, we talk a lot about electric vehicles. You know, average EV takes about 4 times as much more copper as a conventional car today. But it's really not even the car where the demand's going to come from. There's going to be a lot of demand growth from that, but it's starting from a small base. But really what it is, it's the infrastructure needed to charge all these cars. You know, in the US and Canada, the infrastructure is older and needs to be upgraded. All that takes copper. And not only that, you know, everyone who buys a EV for their house is going to want a rapid charger at their house. Every new condo's got, you know, 10, 20 charging stations, every new hotel. And that's really where the demand is going to come from. So yeah, that's our pitch on copper. You know, as I mentioned, the market is fairly balanced today. And but you get out, we don't know if it's 20 or 12 or 24 months, but we think we're headed for a major deficit. So that's copper. We'll talk a little bit more detail about our projects now. So Gibraltar, as I mentioned, it's in BC. It's still a little bit north of Vancouver here. Very large scale open pit copper mine. It will produce on average 130 million pounds of copper per year over its remaining mine life, which is 22 years from today. Life of mine cash costs at Gibraltar are in the $210, $220 range. Today, recently we've been higher, and that's mainly as a result of diesel costs. Although we've seen diesel costs trend down here over the last 6 months or so as the price of oil has come down. So we'll be trending back down towards this 220 level here over the next few quarters. To replace Gibraltar today would be well north of $1 billion US. So we actually bought Gibraltar in 1999 for $1. It had just been shut down by its previous owner, and they were going to scrap it. Management had the foresight at that time to buy it from them. We kept it on care and maintenance until 2004, when the price of copper moved from 60, 70 cents up over $1. So we fired it up on a shoestring budget with the expectation price of copper would stay high for a year or two and then cycle back below $1. So we could start up Gibraltar, produce some copper, generate a bit of cash, and then mothball it again when the price of copper dropped. Well, the price of copper never did drop back to those levels. So we started investing in Gibraltar in 2006, and it ended up being a 7-year, $800 million multi-phase project. That picture there, that gray building in the middle, that's the original 30,000 ton per day concentrator. All the blue buildings is all the new infrastructure, the $800 million we spent. And we took the milling capacity from 30,000 tons per day to what it is today, which is 85,000 tons per day. So from about 50 million pounds of annual production to 130 million pounds. And we did that. We sold 25% of the mine to a Japanese consortium in 2010 for just under $200 million Canadian. We used that cash reinvested that cash into the mine. Recently, we announced we bought back one of our partners. So we bought back 12.5% of Gibraltar. So today we own 87.5% of Gibraltar. When I talk production, that's on a 100% basis. So yeah, we've been operating steady state at the higher level since 2014, as you can see in that graph. The last couple of years have been lower production, and that's as we've just been cycling through lower grade portions of one pit, and then we started a new pit, the Gibraltar pit, last year. In 2023, this year, we'll see production increase. Our guidance this year is 115 million pounds of copper production. And then next year, we should see further increases back towards that life of mine, 130 million pounds. Excellent health and safety track record at Gibraltar. We've won the Safest Mine Award in BC 5 out of the last 8 years. and also many environmental and reclamation awards. It's a fantastic mine, long mine life ahead of it. It just generates cash. We've taken the cash that we've generated at Gibraltar and reinvested it back into not just Gibraltar, into our pipeline of projects. In Q1, we did $36 million of adjusted EBITDA based on 27 million pounds of sales. On an annual basis, we did $110 million of adjusted EBITDA last year, $200 million in 2021, with slightly higher copper pricing and higher production. So we should see EBITDA in the $150 million range this year, obviously depending on the price of copper. We are price takers, but one of the things we do is we buy out of the money copper put options to protect a minimum price and to protect Gibraltar's cost structure. So we are protected for the balance of 2023 at a minimum price of $3.75 per pound. We have upside, those are collars, but we have upside all the way up to $4.72 per pound. So we know in a worst case scenario, we will get $3.75 per pound for most of our production. And that at that price level will generate enough cash to pay our corporate G&A, pay our debt costs, debt servicing costs, and some project investment as well. So it's a great mine, long mine life ahead of it, and it'll just continue to generate cash, which we can reinvest in the business. So on to Florence. Florence is our project down in Arizona, and just on the outskirts of Florence, Arizona. Florence is about an hour out of Phoenix on the way to Tucson. As Clay mentioned, this won't be an open pit or underground typical mine. We're going to use a different technology here to extract the copper, and that technology is called in-situ leaching or in-situ recovery. We'll talk a little bit about that process in a minute. When in production, Florence will produce 85 million pounds of copper per year. Very low cost structure because of this process we're using at about $1.10 per pound. So about half of what Gibraltar's costs are. Again, a long mine life here of 22 years. So it's a fantastic project. We recently updated or put out a new feasibility study for Florence. And fantastic economics at $3.75 copper. It's got nearly $1 billion US in PV, 50% internal rate of return and a 2.5-year payback. So that's at a copper price lower than today. And it's a great project. We've been working away on since we bought it in 2014. And we just need that one final permit and we'll move into construction. So as far as in-situ leaching, what we'll do is we'll drill a well field down into the deposit. And the top of the deposit's about 450 feet, and it goes down to about 1,000 feet. So we drill a well field, and the well field consists of injection wells and recovery wells. We inject a solution, mining solution, down into the deposit. As that solution migrates through the deposit, it leaches out the copper, and then we recover that copper-bearing solution or pregnant leach solution. We pump that to the surface, and then we produce pure copper cathode in a conventional SX-EW plant. This process hasn't been used extensively for copper. It's been used in a few previous circumstances, but this will be the largest scale copper mine using this process. But it's not a new process. It is used extensively for uranium production and also potash. About 40% of global uranium production comes from in-situ leaching, including in the US. So we're just taking a process that's typically used for uranium and adapting it to copper. And the reason we're doing this, is because it's very low cost, both upfront capital and operating costs. But also it's a very green way to extract copper. But we have a very unique ore body in that at Florence. Typically copper is found in hard rock. Like at Gibraltar, we need to drill the deposit and we need to blast it. Then we need to crush that ore, and then we need to grind it and regrind it to get that copper away from the waste. At Florence, Mother Nature has done all that work for us. It's a highly fractured and rubbleized deposit. When you pick up the core, the core in your hand, it just crumbles, which makes it amenable to in-situ leaching. The other benefits from in-situ leaching is that it's a very green way to extract copper, and you can see that graph there. Nearly 80% less freshwater use than a conventional open pit mine, 65% less energy consumption, and then most importantly, 70% less carbon emissions. We're not digging a big hole here, so we don't have a fleet of haul trucks burning diesel. So there's no permanent change to the landscape. When we're done here in 25 years, the Florence site could be converted into a residential neighborhood, a golf course, a park, you name it. So it is.
Brian?
Yes.
Sorry to interrupt you there. That was one of the questions. Then you answered it right on cue. Just why can you do low cost and others can't? I mean, those were all of the reasons why. And this is a unique ore body. There's not many like this. I think that's the key. Most of the copper projects around the world are hard rock, right?
Yes.
Is that correct?
Correct. You think at Gibraltar, we have to do all this work with, the blasting, the hauling, crushing, the grinding. And at Gibraltar, we produce a copper concentrate, which is 29% copper. Then we need to ship that to Asia to get smelted. And then we ship that as a pure form, pure copper cathode, back to North America for end use. Whereas at Florence, we don't have any of those mining costs. And we are producing a pure copper cathode at site that will stay in the US domestic market. That picture there on the bottom left, that's from our test facility. And that sheet there, that is 99.99% pure copper cathode. So that is one of the reasons, that's why it is so low cost. We don't have all those added layers of complexity. So are we good with that? Question? Okay.
I think we're good to go. We can move forward.
Okay. So because this process is not being used extensively for copper, we made the decision to build it in 2 phases. The first phase was a production test facility. It took us 4 years to permit that facility. We built it in 2017 and 18, and then we operated it in 18 and 19 for 18 months. We produced 1 million pounds of copper. When this test facilities cost $25 million. It consisted of 13 wells in the well field, 4 injection, 9 recovery wells, plus observation and monitoring wells, and a small SXEW plant. So we produced about 1 million pounds of copper over that year and a half. And the reason we built and operated the test facility was, 1, to prove to the regulators that we can inject solutions, control solutions 1,000 feet down, and protect the environment. And 2, to prove that this process will work at Florence. And the test facility was very much a success, both from the environmental side as well as on the technical side, proving that the process works. So we have de-risked this project extensively. And we're very happy with the way the test facility turned out. So at the end of the test facility, running the test facility, we needed to amend the two key permits for commercial production. So the one permit comes from the state, from the Arizona Department of Environmental Quality. The ADEQ went through their process in 2020, and in December of 2020, they issued us our final permit. So we've got one of our 2 key permits, the one from the state. In 2021, the EPA started their process. And in August of last year, the EPA issued a draft permit. And that draft went out for public comment. It was a 45-day public comment period from mid-August to end of September. We had the written comments were overwhelmingly in support of the project moving into commercial production. There was also a public hearing, and everyone at that public hearing who spoke was in favor of the project moving into commercial production. And people who spoke was everyone from town council, politicians, and local citizens of Florence. So we have very good support from the local area. The town of Florence is quite small, and we're going to provide, a couple hundred good paying jobs in a town that needs them. So we've had great support. So at the end of that public comment period, the EPA needed to respond to comments and then issue a final permit. So that's what we're waiting for today. And they've been working on that since October. And we think, well, based on discussions with them, they are very close to making a final permit decision. We have regular dialogue with the EPA, and they continue to tell us that they are making progress towards making that decision. Nothing has come up which causes any issues or which may cause any issues. So we expect that final permit. That's the only thing we don't know is when, but we believe it should be here in the next month or two, or we should get that final permit in the next month or two. But the EPA will work at, they'll issue it when they're ready to, and that's the most important thing. And, the fact that they're making progress is positive. So on the financing side, the remaining capital to be spent is $230 million. To date, we've already spent $80 million on long lead items. We started procuring equipment in 2021 when we started seeing supply chain timelines getting stretched and also inflation. So we started buying some of the long lead items back then. So to date, we've spent about 80 million, or a little more than $80 million. So going forward, as of March 30th, we have $230 million left to spend. And as I mentioned, we just issued the feasibility study. So the 230 million is a brand new number, very up to date. So how are we going to fund that? So as I mentioned, we had a $75 million US cash in the bank at the end of Q1. Plus we've got $80 million on our corporate revolver. In addition to that, we've entered into a partnership with Mitsui and Company USA. Ultimately, they will invest $100 million for 10% of the project, but it's a staged investment. So the first $50 million US will come upon receipt of the final permit, and that 50 million will be available for construction. For that 50 million, they get a 2.7% copper stream, plus they get 81% of the offtake. They can buy 81% of the copper from us. When they invest the remaining 50 million, the copper stream converts into the equity ownership. So $100 million for 10% of the project values the project at $1 billion, which is roughly what our NPV is. So that's 50 million from Mitsui. In addition to that, we've done a equipment lease facility with Bank of America for $25 million. So when you total all that up, there's still a small gap to be filled. So we are in discussions on two asset level transactions. One would be a small project loan from a bank, and the other one we're pursuing is a small would be a copper royalty, selling a small copper royalty. Both these transactions could be in the $25 to $50 million range. We may do one, or if we can get the right deal, we may do both. We want to have as many options and flexibility on how we're going to finance the remaining $230 million. So the more options we have is better for us. The other thing we announced in May was a at the market financing, an ATM facility for $50 million. For those of you who don't know, an ATM allows the company, Taseko, to sell shares from Treasury into the market. There's no obligation to do it, but we have this in place. And at the right price, the right valuation of Taseko, it may make sense for us to fund some of the capital with our equity. As I mentioned, we announced this in May, but we have not done anything with this facility. It sits there fully available to us. But again, there's no obligation, and we would only use it at the right price. And then finally, over and above that, we have Gibraltar cash flow. As production increases in the back half of the year, assuming copper prices remain at today's level or higher, we'll start to generate strong cash out of Gibraltar, and we'll be able to use that cash for Florence as well. So, there's still a small gap to be filled in terms of financing, but we're well advanced in these discussions, and I think we'll have, announcements to this effect in a similar time frame as that final permit timing. So we consider it effectively financed today. There's a picture, as I mentioned, the $80 million of long lead items. These are our laydown areas at Florence, starting to get filled up as all this equipment is beginning to arrive. The construction schedule for Florence is 18 months. So if we get the permit here in the next month or two, we will see first copper production about in the middle of 2025. So it's a very short construction window, very straightforward. A nice thing about being in Arizona is there's no construction window in terms of weather. So yeah, as soon as we get the final permit, we'll go to our board and get approval to move forward with construction. Detailed engineering's done, our general contractor's been hired. We just need that permit and we'll be starting construction. So that's Florence. So we have a few minutes to talk a little bit about a couple of our other projects. Yellowhead in BC, it's 2 or 3 hours from our Gibraltar mine. We bought this in 2019 for $13 million. This will be a very large open pit copper mine. And if you look at Gibraltar and Florence combined, this would double our production again. So it would produce 180 million pounds of copper over 25 years. So very large scale. Also has 500,000 ounces of gold and 20 million ounces of silver. So good byproduct credits, which help the costs. But we still have about 3 to 4 years of environmental assessment work here. So what we've been focused on for the last year to 2 years has been community engagement, working with the local community, educating them on the project and the benefits to the local communities of having this in production. So our goal is to formally start the environmental assessment process later this year. And as I mentioned, we have 3+ years of EA work ahead of us. So Yellowhead won't be construction ready for another, say, 4 years, which gets us into 2027. At that point, Florence will be fully ramped up and generating very good cash. So how we finance this and move it forward at that point, we'll have lots of options, but we've got lots of time to figure that out. Prosperity, New Prosperity. As I mentioned, this was the original project within Taseko back from the 90s. This is all we had. It's a phenomenal project. There's 13 million ounces of gold in the ground here and 7 billion pounds of copper, or 8 million ounces of recoverable gold and 3.5 billion pounds of recoverable copper in reserves. Phenomenal project. And again, it's about 3 hours from Gibraltar, south central BC, but it's been stuck in permitting challenges really since 2011. What's changed here, though, is the provincial government, the province of BC, wants this mine built because of the tax dollars it will generate. So the provincial government brought us together with the First Nation group in this area who have been opposed to the development of this project. And they brought us to the table a couple of years ago, and they've been facilitating a dialogue between us and the First Nations group. We're trying to find a path forward for this project. And we've extended these discussions a couple times. We've made meaningful progress, and we're going to keep at it. And we believe that we can find a path forward and a resolution to our differences. Can't really say much more than that, as the details of our dialogue is confidential. But again, tangible progress has been made. And, this is a project that sits within Taseko. We don't talk a lot about it because of where, the status of it, but it's a real wild card. And, this project is such a valuable project. Today's long-term gold and copper price is probably worth, close to $4 billion. So it's too valuable for us just to walk away from. So we're going to keep at it. And yeah, we're confident we can find a path forward. But, we'll see. But again, you're not paying anything for this project when you're buying Taseko stock today. So it's a free credit or a free option, I guess.
Hey, Brian.
Yeah.
Wasn't the stock like more than $10 a share just on when you had prosperity at one time?
I think it was about $20. That was before my time.
Yeah, $20 a share.
Yeah,
It's a huge project, right? How many ounces of gold is it again? Like 15?
Well, 13 million ounces of gold in the resource, or 8 million ounces of gold in reserves, recoverable gold in reserves. So yeah,
right. Is that equivalent? Yeah, plus copper.
One of the top 10 developed, top 10 undeveloped gold copper projects in the world.
Yeah, that's huge.
Why we're
sorry about that.
Continue to work away at it. It's too valuable.
Yeah, exactly.
So just to wrap up here, the last few minutes, Taseko, the recoverable copper, copper in the ground, we've got more in reserves than any of our peers, and not just peers. Between Prosperity, Yellowhead, Florence, and Gibraltar, we've got nearly 15 billion pounds of copper in the ground. Capstone, who used to be a peer, but now Capstone's got a $6 billion market cap after they did their merger with the Chilean assets. So they have got less. Hudbay's got a $2 or $3 billion market cap. Oz Minerals out of Australia was bought by BHP for $8.5 billion. And they have a fraction of what we have in terms of reserves, copper reserves. Eros in Brazil, Copper Mountain, actually I need to update this slide. Copper Mountain has now been acquired by Hudbay. That deal closed about 4 weeks ago. And then Adelaide as well. So, not even peers, but companies with much higher market caps have far less pounds of copper in the ground. And this is how you build a copper, a copper company. You need these reserves. They're very hard to come by, and over the years we've acquired early stage projects, and nearly 30 pounds of copper for every dollar of market cap. Again, well ahead of any of the other or mid-tier miners. And then finally, the valuation case, that top right graph. Today, Gibraltar, our 87.5% of Gibraltar has got a $1.3 billion, and this is in Canadian dollars, $1.3 billion NPV. Florence, its NPV in Canadian dollars is 1.2 billion. You take off our net debt of $500 million Canadian, leaves you with an implied equity value of those two projects alone of about $2 billion. Our market cap today is about a little over 500 million Canadian. So there's a huge valuation gap between the value of those two projects and where we're trading. And I think most of that relates to Florence. You could argue that Gibraltar is fairly valued in our equity, but you're not paying anything for equity or for Florence. And that's, a significant amount of upside. And I think a lot of that discount relates to the permitting. There's a lot of people I know who've looked at us and said, like the story, like the project, but don't want to take the permitting risk. So I'm willing to pay more once you have that permit than, buying it today with that permitting risk ahead. We don't believe it's a significant risk. We've gone, we're a long way through the process, the permitting process with the EPA. We're right at the end. and we think the risk there is minimal. But yeah, that is the opportunity. And we think getting that final permit is the start of the re-rate in our equity. We're still going to need to build it and execute, but I think it all starts with that final permit. We should start to see that valuation gap close. And with that,
Well,
that wraps up the formal part of the presentation.
great. Well, great presentation. We're always, every time we hear the story, we like it even better.
Even every time I tell the story, I like it better.
Well, it's a great company. It's just kind of one of those diamonds in the rough. You have such a strong ESG record. You've been operating this Gibraltar mine forever. You bought it, I think, right at the right time. You got this other project, which is super unique. No one else has an ability, or very few people have the ability to produce copper at around $1 a pound. And a lot of it too. I mean, we're talking, almost 100 million pounds a year for quite a number of years. So we just think it's just so solid. So if someone out there is looking for exposure to copper, I think it's probably a great place to be. A lot of the analysts feel that, and even if the price of copper stays where it is, you're going to be in great shape.
Correct.
Even if it goes down a little bit, you're probably in great shape.
Yeah.
If it goes up, man, now you're really talking about being able to make some money with these two projects, and finance the next one and the next one. So if you have a question for Brian, feel free to ring in. It's a pretty straightforward story. In terms of the permitting, I think for us, it's not a matter of if, it's just when, based on there's really just no opposition to the project. There's a big push to bring in domestically sourced battery metals, and this is the king of the battery metals for sure. So I think there's really no one out there that's going to say you shouldn't have that project, because it's the cleanest way you can access copper on the planet, at least that we know of. Okay, we've got a question here. Let's see, what kind of impact would you expect the Florence final permit to have on the stock? Great question. If we knew the answer, maybe Brian knows it. I don't know it.
It's hard to say. I mean, I can't guess, or I don't have a crystal ball. I don't know what ultimate impact it's going to have on the day we announce it. It was after we announce it. But again, I do believe it is the main reason we have that valuation gap. There's been some real permitting horror stories in the US, and people, shy away from taking on permitting risk. One of the things I didn't talk about is we do have not only is Florence a unique ore body, but our land ownership is unique as well. It's all private land with a very small percentage on state land. We're not on any federal lands. And when you're on federal lands, that's what triggers a much more complex permitting process when you now have a NEPA process and you have the BLM involved. And then you have Army Corps of Engineers, Forest Service. We have none of that. We have the state and the EPA. So we do have a much more straightforward permitting process. So another reason we don't believe the risk is high. But yeah, we have that debate here of what will that final permit do to our equity, and no one's got the answer, but I think it has to have a meaningful impact on our valuation in the days following.
I can kind of answer it a little bit too, just from some of the experience we have with talking to investors about Taseko over the last couple of years, especially in the last 6 to 12 months, about this Florence permit. A lot of people tell me they love it and they own it now. And others tell me, I really like it, but I'm going to wait for this permit. If they get this Florence permit, then I'm going to be buying it fairly soon, like immediately at that point. So I think that there'll be some buying coming in. I can't imagine someone selling the stock on that news. I'm sure there'll be some, but I think that for me, it's really more about what's the impact over time. And the impact for me is it's going to basically almost double your production and more than double your EBITDA. I think that will eventually really impact the valuation models that analysts and institutional investors look at the stock and saying, look, It's undervalued. Let's own it. And I think you'll see a lot more people come into stock at that point in time, based on just the sheer undervalued EBITDA line against your peers. You're trading at a low multiple of your EBITDA now.
Yeah, and you know,
on the size.
if you trust the management team, you know, it's the same team that spent $800 million and expanded Gibraltar. The same guy who ran that construction project will be running Florence. It's the same management team here today. Once we get that final permit, then the outcome, the fate of Florence is in our hands. So if you trust management that we'll be able to execute, well, I mean, that is the key catalyst with this project.
Yeah, another big takeaway for us was that the pilot test facility that you put up wasn't a reduced sized pilot. I mean, it was a full scale pilot just on a small portion of the project area. Is that correct?
Correct.
You're not scaling up the process. You're just going to expand the footprint of the actual mine processing area, right?
Yeah, we had 13 production wells
for
the commercial facility when we start, or sorry, we had 13 production wells for the test facility. When we start commercial production, we'll have about 90 wells, 90 production wells.
Right, but they're not going to be bigger, not more throughput, not bigger pipes. It's not a small scale test.
It'll be a bigger SXEW plant, but
yeah,
the field is just the same wells, just more of them.
Gotcha. Good. Okay. We're pretty much against the time limit here. If you have a question, feel free to ring in here. Today's code word for your feedback report is Florence, like the project in Arizona that they're looking to get ramped up here. Again, Florence, and we'll take any spelling, but I think it's all over the presentation, website, etc. Great presentation, Brian. I'll kind of wrap it up here. If you have another question before we finish, we'll ask those for you. Again, Taseko Mines trades on the NYSE as TGB, on the TSX main board as TKO. If you like to get additional information on Taseko, is available at their website at Taseko, TASEKO Mines, MINES.com. This PowerPoint, or one almost identical to it, is on there. All their press releases, so a lot of information about all their project areas as well. So lots to delve into. If you'd like to get one of these research reports, I have copies. Just send me an email. I can send you probably the two kind of American focused ones, but I can get those out to you. So Brian, any final comments before we close up here today?
No, thanks everyone for taking the time. Always good to tell the story to new listeners and current holders. Any questions you have, any follow-up comments, you can either get a hold of myself or through Clay, or yeah, thanks again everyone for taking the time.
Great. Well, thank you for coming on today. I want to thank everyone who's on the program today. I'll get this feedback report out to you right away. Let's get that back to me as soon as you can, and we'll look forward to having you on a future presentation with Torrey Hills Capital. Have a great day. Until then, be safe and be well. Thanks again, Brian. We'll talk to you real soon.
Thanks, everyone. Bye-bye.
Bye.